Sometimes it feels like the world hates our stock. The market keeps selling, all the news is negative, social media is making fun of it, even the government is against our stock. So we start to question our resolve. Will the price ever go back up? Did we just waste all our hard-earned money on a dud? It's at this point when we need to keep our head straight. We also have to understand it's not in the buying or the selling where the money is made, it's in the holding. Welcome to the Quality Investor. UnitedHealth Group is not having a very good 2024. It seems like every other week, some crestfallen news story sets its giant health provider back another 5%. At the end of 2023, I made a video about 3 stocks set to zoom in 2024. UnitedHealth Group, ticker UNH, was one of those stocks, down 12.3%. Year to date, UnitedHealth is catching strays from all corners of the market. So today, we're going to discuss why UnitedHealth is having so much trouble in 2024. Is it due to an irrational Mr. Market, or has UnitedHealth Group soured and is ready to be put out to pasture? Before we get into it, make sure to hit that like button and subscribe to the channel to stay up to date on all the quality businesses in the market. I was optimistic about UnitedHealth. They were cheap, around a 20 PE, when I proclaimed that they would soar high in 2024. They pay a great dividend, and they compound free cash flow with the best of them. Their size and position in the market gives them pricing power, and their vertically integrated business model was doing wonders for their earnings. But it all started early this year on January 12th. UnitedHealth reported its Q4 2023 earnings a beat on both the top and bottom line, yet medical costs came in a few basis points too high, and it terrified the market. A prompt 3% drop followed. Then, not to be outdone, on January 25th, Humana reported legitimately shaky numbers, including negative earnings. And Humana, which is 1/10, yes, 10%, the size of UnitedHealth, dragged UnitedHealth down another 4%. Excellent, I thought as I purchased more shares. The market's fear is when I can be greedy. And sure enough, over the next month, the stock started climbing, albeit steadily. And I thought, the storm has passed and we're on to glory. Not so fast, said the DOJ, as the Wall Street Journal reported that they opened an investigation into UnitedHealth. An investigation, mind you, not a lawsuit, not any real action, just an investigation. I did a video on it and the link is in the description, so check it out to see why it's a non-starter. Nonetheless, the bears let out their bellow, pushing the stock down over 10% the next week. And just like last time, the market slowly started gaining again once they realized their irrationality. This time though, what happened on April 1st was no April Fool's joke. The Centers for Medicare and Medicaid Services, or CMS, the government agency responsible for Medicare, released their 2025 rate announcement. And this time it felt real. You see, a big part of UnitedHealth's business is Medicare. And with Medicare Advantage in particular, they receive payments from the federal government. The stock fell over 6%. We'll see if it can recover. See here in their annual report. In fact, these payments account for 40% of UnitedHealth's consolidated revenue. This is actually material. This could actually present a real investment thesis altering event. Or could it? To understand the impact, we have to see what this payment is and how much UnitedHealth's actually receiving. The first thing to understand is this is the 2025 payment. This isn't an ongoing thing. This isn't even for 2024. This is just 2025. The second thing to understand is what the market's actually upset about. When they released their original advance notice, they said there was an expected increase of 3.7%. At this point, the health insurance providers go to their congressmen and they lobby for a higher rate when the final announcement is made. And usually that's what happens. So you have to assume the market is pricing that expectation of an increase into the share price. But on April 1st, when they did their final rate announcement, they left that rate, 3.7 increase, unchanged. So there is an increase, number one, but the market was expecting a higher increase, so they punished UnitedHealth and particularly Humana very hard. And the reason for that is what I mentioned earlier. How much of their revenue is actually tied to these payments. So what does this mean in real numbers? So what this is saying here is that 3.7% increase it represents a $16 billion increase from 2024 to 2025. And the federal government is projected to pay between 500 and 600 billion in payments to the health insurance providers in 2025. Okay, so we have some starting points. Let's assume 500 billion, the low end for 2025 payment. Subtract 16 billion from that, and we get 484 billion, and we'll use that as our 2024 payout. So let's do some math to see how this actually affects UnitedHealth. So when I do my valuations, I build a revenue model for the companies I look into. This is the revenue model for UnitedHealth. You can see the 2023 actual numbers here. So let's see what happened. Per UnitedHealth's annual report, they receive 40% of their income from CMS. That equates to 148.6 billion in payments from CMS. You can see here for the Medicare segment of their business, they generated 129.8 billion in revenues. So that means about 18.7 billion. Part of their Optum business segment is health providers, and that part of that payment went there. Okay, so we're going to use that 148.6 as our baseline. As part of their investor conference, UnitedHealth provided this guidance for 2024. What we're concerned with is the United Healthcare part of the guidance. And they say that they expect an 8 to 10% long-term revenue growth rate. So for my growth rate in 2024, I applied that 8% to the Medicare. So here's that 8% growth rate I applied, growing from 129.8 billion to 140.2 billion. Keep in mind, historically, they're growing at a much higher rate than 8%, just over 11% compound annual growth rate. All right, so let's come down here. Assuming that 40% revenue, that makes the CMS payment 159.7 billion dollars. Remember what I said when I showed you the 2025 rate increase, that our baseline for the 2024 CMS payment was 484 billion? Well, we're assuming that is what they paid out entirely to all health insurance providers. That means 33% of this 484 billion went to UnitedHealth. So using these baselines, what does that tell us about how much we'll receive then in 2025? So per their release, they said that that payment was going to increase by $16 billion. So we have 484 to 500 billion. We're using that low end of their range. And again, assuming that a 33% of that goes to UnitedHealth, that's 165 billion, which goes to UnitedHealth. And what do we see here in some of the numbers? Remember what they said that increase was? 3.7%? Well, based on my calculation here, my back of the envelope calculation, that's a 3.3% increase of the CMS payment to UnitedHealth. So I put in a 3% growth rate for 2025 for the Medicare portion. The rest of it, of course, gets stuffed into Optum. I have Optum growing at 12%, but they're very optimistic about Optum. It's by far their fastest growing part of the business. Regardless, that gives us 144.4 billion in the Medicare segment of UnitedHealth's business. This is my revenue projection. So from there, we want to figure out how much free cash flow over the next 10 years UnitedHealth's going to generate, then discount that back to get our current value. So there's a few other assumptions that we need to make here. So the top chart here, this is the assumptions I'm making for some margins as well as share repurchases and the like. So you basically see here, my year one, I'm estimating an 8% operating margin, okay? That's a 71 basis point decrease. They pay out a little bit in interest based on what their projected interest expense is going to be in year one. I have an 11% interest rate margin. That's dividing it by the operating income. Income tax is going to be roughly 21.8 based on analyst projections, and a very conservative $1 free cash flow conversion, meaning they're converting $1 of net income into free cash flow. That's well below what they did just last year at $1.15. They expect to repurchase about 2% of their shares, and they pay a very lovely dividend at $8.35. So you can see here my bear, base, and bull estimates for each of these. We're going to use our base case here. So 9% for operating margin, 9% for the interest expense margin. It's going to fall down over the next 10 years. Remember, this is what it's going to converge around at year 10. 22% for our income tax, $1.08 for a free cash flow conversion. They're going to repurchase about 1% of shares per year, and dividend growth of 12.5%. I'm using a perpetual dividend growth rate here of 6.5%. This here is the revenue segment growth. Here's my 5% compound annual growth rates. These are the actual compound annual growth rates for each of these segments. And you can see here that Medicare, that grew at 11.4%, and their other portion of their Medicaid, community and state, that grew at 11.5% over the last 5 years. So the total United Healthcare, their insurance arm of the business, grew at nearly 9% compound annual growth rate over the last 5 years. My base projection for them now is 4.5% over the next 10 years. Optum, which is their health provider arm, along with their data and analytics and their pharmacy arm, that grows much faster. That has a 16% 5-year compound annual growth rate. I'm projecting at nearly 9.6% over the next 10 years. Those Medicare people, this is how many people are in the Medicare program for UnitedHealth. And per their fiscal year 2024 outlook, which is linked in the description, they are expecting about 450,000 people added to the rolls in 2024. That would give us a 2.26% increase in 2024, up to 20.3 million people inside the program. From there, I'm projecting about 2% increase per year for the next 9 years. And then Medicare per person, or how much every person pays annually to UnitedHealth. This is basically the Medicare segment divided by the Medicare people. And it's about $10,800 annually that these people pay to UnitedHealth. That represents a 5.2% increase in year one. So that gives us total revenue growth for UnitedHealth over the next 10 years of 5.9%. Their last 5-year compound annual growth rate was 10.4%. So about half that. What do the final numbers look like here? Okay, so for total revenue, like I said, 5.9% increase. Operating income is going to increase at about 6.29% over the next 10 years and a 9% margin at year 10. Net margin at year 10 will be about 6.39%. Our year one earnings per share is going to be at $24.33. Analysts, mind you, are projecting over $26 earnings per share. But then our 10-year compound annual growth rate for earnings per share will be at 7.7%. Free cash flow, that'll grow at a rate of 5.9% in the next 10 years. I'm projecting that $1 in year one to expand to $1.08 for free cash flow conversion, and that gives us a free cash flow margin of 6.87%. Our current free cash flow margin is 6.9%, so not a lot of margin expansion here. Fact, slight contraction. So with these projections factoring in the 2025 rate announcement from the CMS, and then using the outlook, the long-term outlook from UnitedHealth, what does that mean for our valuation? As of this recording, their share price is at $461.02. They have a current earnings per share of $23.84 and a PE ratio of 19.3. Based on all my calculations here, we get a base discounted cash flow of $660.98, a dividend discount price of $640.44, and an exit multiple based on their peer comparison of $405.88. That comes to a valuation average of $592.07 and a 28% upside on my base case numbers, which are very conservative. We want a 10% margin of safety. That's an acceptable buy price of $532.86. The PE would have to go up to 22.4. That's just below their 5-year average and just above their 10-year average. At a 20% margin of safety, we have an acceptable buy price of $473.66 and a desired PE of 19.9. That's below both their 5 and 10-year averages for PE. In fact, on a forward PE, that's below their 5-year average and just above their 10-year average. So I view this decline, this very poor start for 2024 for UnitedHealth, as a very good buying opportunity. And I plan on adding some more shares. Of course, this is not financial advice, but to me, this is a great sale for UnitedHealth, especially with the type of dividend that they pay out. There's a lot of upside here. They're a cash flow machine, and they're going to continue to generate massive amounts of cash flow for investors well into the future. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.